Good morning, good morning, good morning. Welcome to the Morning Blast with myself and Mr. Michael Brown, who has just messaged to say, it's not letting me in, it's not letting me in. But then I see him turn up on the call anyway. So we'll put that down to a Mr. Michael Brown error. How are you, Mr. Michael Brown?
I tell you what, we'll put it down to. I think we'll put it down to you starting this late because I did exactly what I did yesterday.
Right.
It didn't work.
I'm sorry. I think if you check the start time, it will say 08:30. Anyway, welcome to the Morning Blast as usual. It is a review of yesterday, a preview of today. And it's Friday. It's finally the end of the week. Blink and you miss it. Before we crack on, I'll get legals out of the way. Nothing discussed on the Spaces session constitute trading or investment advice or infers any kind of endorsement by PIQ, myself, Ryan Paisley, or indeed Mr. Michael Brown. How are you? You good?
I'm all right. Now I'm here. Very good morning to you, Ryan. Good morning, everyone.
Good morning
Happy
to you.
Friday. The end of another, well, I was going to say a long week, but frankly, it's been a little bit of a dull week, really.
Yeah.
There hasn't been that much going on until Trump went a bit mental with tariffs again overnight.
Well, this is it, right? This is it. Keep us on our toes.
Oh, well, I'd rather not be on our toes. The Ryder Cup starts today. I'm hoping
Does
for
indeed.
a nice, calm cruise into the weekend, if I'm being completely honest.
Exactly that. Well, before we do crack into the weekend, then what did happen yesterday?
Indeed, yes, it was another
segue. That was seamless.
Almost. It was another soft day in terms of risk appetite yesterday. The S&P down by about 0.5%, the Nasdaq 100 down by a similar magnitude. That makes it 3 straight daily declines for both. Again, just before anyone sort of cries Armageddon about any of this, the S&P is still up by over 2% on the month. And of course, September is typically the worst month of the year for the S&P.
Right.
So if that proves to be the case again this year, then I don't think it's worth worrying too much.
This is it, right? So it did make me laugh yesterday when I was kind of doom scrolling through social media. Yeah, the usual people going, "Oh my God, it's the end of the world. You have 3 down days on the spin." I'm not being funny, but if it's news and big news that the S&P has had 3 down days, and then they've not been big down days. If that's news, then it just shows you what a hell of a bull market we're in.
Absolutely. I fully agree with you on that one. And actually, what's also a little bit of not necessarily a head scratcher, but again, just sort of puts some of this concern to bed is actually the reason we saw equities sell off yesterday was because we had a hawkish repricing of Fed policy expectations after some better than expected US data, which I'll get on to momentarily. So we've now got 39 basis points of cuts in the curve by year end compared to the 45 that we had this time last week. But that's, I would argue, a good thing. The reason the market is saying we don't think the Fed are going to have to cut as much as we did is because the economy is proving more resilient than we thought it was.
Exactly. It's the classic good news is bad news for the stocks.
In the short term, in that sort of knee-jerk move on the back of the data. And actually over the longer term, the fact that the economy is performing well and remains relatively robust is actually strengthening the bull case in my mind.
Well, on the medium to longer term, absolutely. Yeah, and actually you do find it this kind of, this. I guess it's the right way for markets to be behaving at the moment, really, which is bonds down, stocks up, vice versa. But it does always seem to be more apparent when markets are quieter, because then it's like the true kind of like the true flows from one into the other kind of occurring.
Yeah, absolutely. I would agree with that. And as you said,
twice today.
This is worrying precedent. We did see Treasuries trading softer across the curve once more. The 2-year yield up by 5 basis points, the 10-year up by 3 basis points. Just worth flagging that weakness was seen across fixed income, across developed markets. But again, gilt massively underperforming. The 10 and the 30-year gilt yields rising 9 basis points apiece yesterday, both trading to 3-week highs. The reason I mention this is because I think it's just a further sign that the market needs absolutely no excuse whatsoever to pounce on any signs of fiscal weakness or fragility. And that's obviously going to be something that the UK continues to suffer from at least for the next 8 weeks until we get the budget on the 26th of November. I was going to say probably a lot longer than that as well. In terms of markets elsewhere, the dollar broadly firmer, the dollar index up to a high about 98.60 late in the day yesterday. In turn, cable coming back below the 134 mark, the euro surrendering 117 and dollar yen testing resistance at 150 to the upside. In terms of catalysts yesterday, that solid US data that I alluded to, really three parts to it. The first was a big upward revision to second quarter GDP, which pointed to the economy having grown by 3.8% on an annualized quarter-on-quarter basis in the 3 months to June. That was up from the prior estimate of 3.3%, so a very, very significant revision there. Secondly, we had a much better than expected jobless claims report. Initial jobless claims coming in at 218,000 in the week to the 20th of September. That's the lowest claims print since July. Continuing claims also coming in better than expected at 1.926 million. And that print, of course, pertains to the September non-farm payroll survey week. And then thirdly, last but by no means least, we also had much better than expected durable goods orders, which rose by 2.9% on the month in August compared to the 2.8% decline that we saw in July. Incidentally, durable goods orders are going to be huge in September because we have had various reports overnight of some orders of Boeing aircraft from Turkish Airlines and from Norwegian Airlines as well. So that is going to skew the durable goods orders metric to the upside next time out. In terms of other bits and bobs, obviously I mentioned tariffs. There has been quite a lot of news on the trade front, most of this coming overnight with President Trump taking to Truth Social once more. All of these are effective from the 1st of October. So I won't just to bear that in mind. We're going to have the US is going to impose a 50% tariff on kitchen cabinets. Seems a rather odd thing to choose, but never mind. A 30% tariff on upholstered furniture. Right. I promise I'm not making this up.
No, but on this, right, I do think that when like something so specific has been really kind of singled out, that there's
mate runs a kitchen cabinet.
Yeah. There's definitely a backstory to this.
I can guarantee that. Yeah, it's bizarre. You know, you're absolutely right. There is. We're not allowed to say anything defamatory on this app now, but I would not be surprised if, one of Trump's friends runs a kitchen cabinet factory and another one runs a plant making bathroom vanity mirrors, because they're going to be charged at a 50% levy.
Well, exactly that. There's definitely, I refuse to believe that these are just completely random. But also on the kind of the language we can use on the show, we do need to get clarity from Tom whether or not we can say shit, fuck or bugger.
Yes, I think that would be very useful, to be honest. In terms of those other tariffs, 30% on upholstered furniture, 25% on imports of heavy trucks. Not sure why light trucks were excluded, but there we go. Oh, it's fine to swear. There we go.
Oh,
brilliant news.
Fucking thank you for that.
And perhaps the most important of those tariff announcements was a 100% tariff on branded and patented pharmaceutical products. The important one with that, though, is that companies which are building plants in the United States are going to be exempt from that pharma tariff.
Yes.
So if you want to trade this morning, go long like under construction signs and scaffolding and things like that. Years ago when like the Greeks and the Italians used to just have a bit of scaffolding sticking out their roof to get lower property taxes.
Yes.
Basically, I think what firms are going to go down the lines of here. There were a few other trade headlines. Oh, no. Sorry, I've just seen a message from Clive. Completely through me.
Clive, stop texting us while we're recording.
You're going to have to reveal all later. Sticking on the trade front, the Wall Street Journal reporting overnight that the Trump administration is reportedly weighing a plan to dramatically reduce the US's reliance on semiconductors, which are being made overseas. According to these sources that the journal have been citing, companies that don't maintain a 1-to-1 ratio, i.e. one US-made chip, one foreign-made chip, over time would be subject to a tariff. This is something that the Commerce Secretary Howard Lutnick is apparently pushing for. Something else that Howard Lutnick has been doing is basically begging for more money from South Korea. South Korea, as part of this trade deal that they struck, pledged $350 billion worth of investment in the United States. Despite this deal having been agreed and signed and delivered, Lutnick is now suggesting that South Korea should instead pledge an investment of up to $550 billion, and that the majority of that investment should come as cash as opposed to loans. So we will see how that one develops. I can't imagine it will go down especially well. Moving on from that, we had plenty of Fed speak yesterday. Ryan's best mate, Steve Moran, was talking again about how he thinks policy is as much as 200 basis points too restrictive. 2025 voter Goolsbee was saying how he's uneasy with potentially front-loading too many rate cuts. 2025 voter Schmid was also relatively hawkish, noting that he will be data-dependent going forwards and that inflation remains too high. We also heard from Governor Bowman, of course, Vice Chair for Supervision as well, who was much more dovish than that, noting that it is now appropriate to shift to jobs instead of inflation and that the labour market is much more fragile than the Fed expected. And last but by no means least, we heard from Dallas Fed President Lori Logan, a 2026 voter, who gave a speech that was very much for the purists. She was talking about how the Fed should be preparing to target a new benchmark rate, and instead of using the Fed funds rate, should target the tri-party general collateral repo rate instead.
Okay.
I'm not entirely sure what any of that means. I'm going to be completely honest with you. It's one of those fancy financial plumbing things that people get very excited about, and then we only really care about if there's a crisis. So hopefully we never have to care about that.
Is this something that I'd have to ask my dear friend Conks to create an infographic for?
I think that might be wise. Yeah,
because crayons
I've got no idea.
So use crayons for me personally, and also explain it to me like I'm a golden retriever. That would be much.
I think that's about right. Sticking with the Fed, Lisa Cook, of course, Fed governor that Trump is trying to oust. She submitted a whole host of documents to the Supreme Court yesterday. It's a very, very long lawsuit, so I haven't read it, but effectively one of the lines within it was she was warning of, quote, market chaos if the Supreme Court allowed Trump to fire her and set a precedent that the president is allowed to fire governors at the Federal Reserve. So we'll see how that one develops. Moving on, just a few sort of random corporate headlines. The European Commission, they've been very busy over the last 24 hours. They've opened a formal investigation into potential anti-competitive practices at SAP. SAP are the biggest stock by weighting in the DAX, which is why we saw the German benchmark rolling over a bit yesterday. Reuters sources reporting that the EU are going to slap an antitrust fine on Google in the coming months. Apparently, Google is accused of favouring its vertical search engines. I didn't realize Google was a vertical. What's a horizontal search engine? Never mind, they're going to get a fine. Meta, they're also potentially going to get a fine. The European Commission are investigating whether Meta has failed to adequately police illegal posts on Facebook and Instagram. Their fine could be as much as 6% of its annual global sales if the EU's findings are confirmed. That's not going to be a small number, I'll tell you that for now. Something else that isn't a small number is Amazon. They have agreed to pay $2.5 billion to settle the FTC's case against Amazon Prime. A yard of this is going straight to the US government. A yard and a half is going in user refunds. Not entirely sure what the refunds are for, but there we are. Moving into the...
Sorry, just before we do move on from that, it's just worth flagging that we know, especially like the EU antitrust, new fines, etc., just worth flagging that Trump has got to be in his bonnet about this. So be prepared that we might see some kind of messages on Truth Social about this, especially with what's going on between the US and the EU at the moment. So just wanted to bear in mind on that front.
Although not today, because he's at the golf.
Well, exactly that. Well, so we'll be watching it, so I hope not today.
Well, yeah, and there is a rumour that Trump's actually playing. But yeah, we'll see.
Kim Jong-un style.
Exactly. Best golfer the world's ever seen. Where was I? In the tech space, Blue Owl and the Qatar Investment Authority, they have joined up on a joint venture worth $3 billion to get into the AI and data center business. Separately, the Trump administration, according to the Wall Street Journal, they have started to use AI models provided by Elon Musk's XAI. Seems like that bromance could be sort of tentatively back on. Moving on from that, job cuts. Starbucks, they're cutting 900 jobs and closing some stores in a restructuring effort. Ticketmaster, moving on to the UK, they've been subject to a CMA investigation. They are going to have to be forced now to give more information on ticket prices when you're sat in an online queue. This is, of course, in reaction to all the nonsense that we had around Oasis and the dynamic pricing issues, etc., etc. Also here in the UK, potentially a bit of good news. Sky News, Mark Wyman reporting yesterday that eBri, they're an FX and payments company, 49% owned by Santander. They are looking to potentially revive their plans for a London IPO as soon as the first half of next year. So that could be a little bit of rare good news for the London market. And two final things from me. The US sold 7-year notes yesterday at a tail of 0.6 basis points, which is not exactly particularly pretty. And last but by no means least, Ryan, your favorite economic data point came out overnight. The Tokyo CPI for
Yes.
Japan, a little bit softer than expected, actually, at 2.5% on a year-on-year basis in September, down from the prior 2.6, well below the 2.8% consensus. Our good friend Zach Eisman did a nice little thread on Twitter yesterday about the BOJ and why they may hike as soon as October, but sadly he refuses to listen to us now, so he won't know that I've praised him.
Well, and I'm not going to tell him. I'll give you a clue. And I just thought I lost my phone, and I was starting to panic, and I realised, no, I'm actually recording right now into it. There was a moment of sheer panic. I was like, shit, where's my phone? And it's right in front of me. Well, Michael, thank you very much for that. A slight change to scheduling. We are going to try, and courtesy of our very dear friend Clive Lambert from Future Techs, who, as we all know, myself and Michael aren't massive fans on technical analysis because there's a lot of bullshit around technical analysis. But Clive, ex-live floor trader, very good bloke, he is one of the few people that I would actually trust with technical analysis. So do check him out. I'll make sure I tag him on a post later on today. But he's going to send over each day just a little snapshot of some key technical stuff that we can kind of read out for people, because we do appreciate that it's not just about what me and Michael like. That a lot of people do follow technical analysis, etc., etc. So forgive me if I fuck this up. But first off, when? All right. So first off, so again, this is courtesy of Clive Lambert at Future Techs. Third red candle in a row on the S&P, but still above the 6,600 level. So probably just a pullback, which ties in nicely with what me and Michael were saying just now. So thank you for that, Clive. European equity indices just going sideways for now. DAX underperforming its peers, yada, yada, yada. Weaker tone in bonds persists. Bund futures eyeing support at 127.54.62. Gilt futures posted a big red candle yesterday. Still a while off the January lows though. Oil markets testing some key resistance after posting 2 to 3 days of solid gains. Gold and silver, quote, still looking horny as fuck. There we go. Short-term supports holding, keeping Clive rather 100% bullish, so no pressure there. Platinum had a strong day yesterday. Copper posted a shooting star, which is a bearish reversal candle in the end, so maybe that got a bit carried away with itself a bit too quickly. Broken resistance zone at 101.64. At 101.192, still below though, so want to keep an eye on there. Right, now we move on to the traditional segment, which is me reading out some highlights from the overnight news roundup. Again, follow Zach, subscribe to the Substack, yada, yada, yada. And starting off in macro news, Trump's semiconductor shockwaves. The Trump administration is weighing a dramatic plan to reduce US reliance on overseas semiconductors, threatening tariffs for those who don't onshore production, pressured Taiwanese and Korean tech names, while Intel found strong bids in overnight markets. I'll be honest, given that Trump / the US government now own a considerable chunk of Intel, you'd kind of be surprised if we did go a week without a bullish headline for Intel, because obviously he is going to be wanting to make sure that when he looks back in a year's time, he can say, look, we bought Intel here, it's now worth this, we've just done this, we're amazing. So I think you really got to break it down to that simple. Trump also announced the new industry-specific tariffs that Michael went on about just now. Again, just a reminder, specifically targeting cabinets and bathroom vanity mirrors. Someone find out what's happened there, please. Most dramatically, announced a 100% tariff on branded patented pharmaceutical products, unless companies build manufacturing plants in the US. I would say that this could be quite impactful, Michael. I don't know what you think. Maybe on Scandinavian stocks, because obviously Scandinavia is some quite sizable pharmaceutical
and Swiss as well.
Yeah, which make up quite a considerable, surprising amount of their weighting, especially like the Danes. Anyway, we've spoke about Japan inflation numbers. So Japan's economic reality check, the yen held steady after Tokyo consumer inflation unexpectedly remained flat. However, Japan revised July real wages to a 0.2% fall from previously reported 0.5% growth, marking 7 consecutive months of contraction in inflation-adjusted pay. Japan's trade negotiator secured most favored nation status on US chips and drug tariffs, ensuring Japan won't pay higher rates than the EU. China's maritime strategy is under fire, apparently. Global shipping companies continue ordering vessels from Chinese shipyards, despite US port fees targeting. Despite US port fees targeting China's maritime dominance. If we remember, this is all to do with if a ship from a company lands in the US, if X% of that company's fleet, not necessarily where the ship is from, but if that X% of that company's fleet is from China or made in China, they undergo higher tariffs. So again, it was all very convoluted, but it appears it's having a bit of an issue. China's bank leasing subsidiaries, are discussing converting shipping leases into mortgages as protection against US levies. Beijing has also launched a sweeping probe into Mexican tariffs as trade war widens, while also expanding semiconductor and battery cooperation with Thailand. UK housing market innovation. The UK's largest house builders are developing their own versions of Help to Buy, running out of patience with the government housing market stimulus efforts. If we remember, part of Labour's manifesto or part of Labour's pledges was build, build, build. Apparently, they are not building.
Yeah.
And it's bad when the house builders themselves are going to step in and drop the government's shoulder and start setting up their own policies. So definitely want to keep an eye on it, but
maybe it is finally time to have a nibble at long Taylor Woodrow.
Well, maybe I'm still
if you can get in.
But yeah, I don't want to work on the book though. Amundi, which is Europe's largest asset manager, is betting that the Bank of England will cut rates faster than markets expect and may need crisis-era tools like QE or yield curve control to stabilise gilts. But to be honest, I think that's a bit much, but okay. Global bond market finds relief. Long bonds are suddenly back in vogue as falling supply eases nerves across Japan, UK and Australia, while reduced Fed independence concerns support the US long end. Australia's latest bond auction that showed strongest demand since October 2024, by my maths, is nearly a year ago, signaling post-CPI sell-off may have bottomed. JP Morgan, they estimate $57 billion in equity sales from month-end rebalancing. It's that time of year again, or month again, with $18 billion from the US defined benefit pensions. Geopolitical news, Trump's Middle East ultimatum. Trump said it would block Israel from annexing the West Bank, issuing an ultimatum to prevent the move that Western and Middle Eastern powers warn could inflame regional tensions and jeopardize Israel's normalized Arab ties. Trump also urged Turkey to curb Russian energy imports, warning the US stealth fighter jet sales depend on Ankara's support for American goals. Europe's drone defense crisis. Denmark's PM warned the Danes to brace for more hybrid attacks, pointing to Russia as Europe's main security threat before suspected drone sightings disrupted Danish air traffic for a third time this week. European defense ministers will join a video conference to discuss creating a drone wall defense system. Feels very much like Golden Dome and all that stuff that we keep hearing about. Korean defense Peninsula tensions. South Korea fired warning shots after a North Korean merchant ship crossed the northern limit line seaboard on Friday morning. That's according to Yonhap. And equities, before I hand back to the big man, AI spending bubble warnings. Hedge fund manager David Einhorn cautioned against unprecedented AI infrastructure spending may destroy vast amounts of capital, even if the technology proves transformative. A Wall Street Journal article highlighted that tech companies are pouring in hundreds of billions into data centers while taking on heavy debt, but current revenue remains relatively tiny, echoing dot-com bubble concerns. I've got to be honest, having seen all the numbers that are being bandied around, I think that's probably a decent concern to have. TSMC production at full throttle. TSMC's 3 nanometer and 5 nanometer production lines are nearly at 100% utilization through the first half of 2026, inundated with orders from Qualcomm, Apple and MediaTek. The latest AI chips, including NVIDIA's Rubin and AMD's MI355X GPUs, are ready for production, while Amazon's Trainium 3 enters mass production early next year. Chinese EV and AI expansion. Xiaomi's billionaire co-founder vowed to speed YU7 electronic vehicle production deliveries to hit 40,000 within 3 months. Beidou, they're exploring new markets, including Australia for robo-taxis as the expanding fleet hits operational profitability targets in several Chinese cities, while fully driverless operations plan for Dubai going ahead. Alibaba launched AI model that processes multiple inputs from forms including text, images and audio. What else we got? Corporate deal making surge. Boeing landed on one of its biggest deals this year, with Turkish Airlines agreeing to buy up to 225 jets following the Trump-Erdogan call. ByteDance, they're going to set up a new US company as part of TikTok's restructuring. Financial regulators, they're examining unusual trading patterns in companies adopting cryptocurrency strategies, raising concerns about unusually high volumes before announcements. And finally, for me, Korean chip supercycle. Morgan Stanley is heralding a memory, quote, supercycle with strong analyst upgrades for SK Hynix and Samsung, highlighting a potential prolonged $100 billion rally in Korean chip making. Japan still works. They spiked after Goldman Sachs initiated a buy rating on expected profit growth and strong demand. And that is it from me. Back to you in the studio.
Very good. Thank you, Ryan. In terms of today, then, there is not really much going on during the European session this morning. In fact, there are no notable economic releases whatsoever. Well, that doesn't start until midday. We do have a few bits and bobs throughout the the London afternoon, though, the US session. At 1:30, we get the latest GDP stats out of Canada. The economy is set to have grown by 0.1% on a month-on-month basis in July, compared to the 0.1% contraction that we saw in June. Also at 1:30, we get the latest core PCE data out of the US. Of course, this is the Fed's preferred inflation metric, and now we must all take a shot of something. In any case, the core PCE number that is expected unchanged at 2.9% year on year in August. In fact, that is not only the Economist consensus, but it's also what Chair Powell himself said on Tuesday, noting that he sees August core PCE at 2.9%, driven primarily by goods. So there we have it. It was straight from the horse's mouth. At 3:00 this afternoon, we get the final. Was that a horse?
That was a horse, yes.
Deary me. And then at 3:00 this afternoon, we get the final read on consumer sentiment from the University of Michigan. Excuse me, that index is expected unrevised at 55.4. Besides that, we're due to hear from the Fed's Barkin and Bowman, as well as the ECB's Escriva this afternoon. The usual warning around potential gapping risk over the weekend on any trade or tariff-related headlines. And, of course, this ongoing case around the Fed Governor Lisa Cook. But more importantly than that, as we've alluded to a few times, the Ryder Cup starts today. And I think everyone's focus as we move through the rest of the day. So for this morning and for this week, that is all from me.
Michael, thank you so much, as usual, for being your amazing self. Listeners, thank you so much as well for tuning in. We hope we've added some value and put the occasional smile on your face this week. Also, thank you to Clive and Zach. And also, once again, thank you for bearing with us as we move over to Podbean. So far, it seems like we're getting a decent number of you still listening in live, and it just makes life easier for everyone involved for pushing out to the podcast. So thank you for bearing with us. But that's it from us. Whatever you're doing today and the weekend, keep it tight, stay safe, have a very, very good one. Do yourselves a favour. Call your mum, call your nan, call your dad, call someone. Say hello, be nice to people, and we'll see you all on Monday. Much love.
Indeed. Bye for now.